Shares of Solid Power and QuantumScape, two companies that are both developing next generation battery technology, have absolutely been smashed this year. Both are down well over 70%, not just near their 52-week lows, but basically at their all-time lows as well. There's a good chance if you're watching this video, you're trying to figure out, do I need to sell my Solid Power QuantumScape? Maybe it's time to buy, as beaten down as these stocks are. Well, this is The Smattering. I'm Jason Hall, and we're going to take a closer look. But first, I want to thank The Motley Fool, our sponsor. We get to make these videos because of our partnership with The Fool, and The Fool can help you invest better. If you're looking for great stock ideas, go to our link, fool.com/The Smattering, put in some info, and The Fool's going to give you its 10 best stocks to buy right now. All right, on to our content today. Solid Power, QuantumScape. What do we have? These are two recent public companies. Both went public via SPAC sometime in the past year, give or take a few months. The key to remember, though, is that both companies went public to raise capital to continue to develop their pre-commercial products. That's the key, right? They're both working on next generation solid state batteries. What does that mean? In short, their technology is for lighter batteries. Battery weight's a big concern for EVs. And also solid state technology is purported to potentially be safer, less risk of fire than you have with the liquid state and gel batteries that are kind of the primary lithium batteries we have now. And also they can take a charge a lot faster. So you add all that together, you can drive down the weight, you can drive down the cost, you can increase range, all of these different things that their batteries potentially bring to the market. The problem is both of these companies are absolutely chewing through their cash. As you see on the screen, the purple line is the cash on their balance sheets. Neither company really has any debt, but you can see for both that purple line has continued to decline. The yellow line is operating cash. And since these companies don't really have any meaningful revenue that they're generating, it's all operating cash burn. Over the past 12 months, Solid Power's burned about $38 million. QuantumScape's burned around $200 million. Now, they both have some margin of safety, right? They have enough cash to see them through for some significant period of time in the foreseeable future. Here's the risk. They're going to need cash to start bringing manufacturing online as well. I think both companies are considering looking at third parties to help with their manufacturing, but at some point you're going to have to deploy substantial amounts of capital to scale up, to bring those products to market. They're going to have to raise capital at some point, right? Interest rates have absolutely skyrocketed this year. That's sent stock multiples down because it's riskier being the owner of the business versus owning the debt where the business is the asset, right? So here we are as equity owners. That's a big part of the reason the stock price has fallen. Investors are seeing these companies that continue to say they're going to be multiple years away from being able to go commercial. And the likelihood they're going to have to raise capital along the way, either to continue to fund operations and or to start paying to build out their operations with those capital investments down the road. The bottom line is the market sees continued risk here. Now, let's peel the two businesses apart because, again, we're talking about two separate companies with different operations, different strategies, different IP that they're working on. And let's talk about the difference between them. I want to start with Solid Power because I think there are some things that investors need to be aware of that are going right now, particularly with leadership. At the end of November, right after Thanksgiving, Doug Campbell, who is one of the co-founders, took the company as when it was spun out of the University of Colorado, played a key role in developing its technology, and ran the company essentially since then. Well, he just abruptly resigned, right? Now, worked with the board. We don't know the specifics, but it was an immediate resignation and immediately stepping down from the board. So to me, I think investors need to be really, really cautious and careful when you have a startup with such an important founder leader who's leaving the business in a way that seems relatively abruptly. They've announced that David Jansen, who's the president and serves as the chairman of the board, is stepping in as the interim CEO, and they're doing a full CEO search. That makes it pretty clear the company wasn't fully ready for a transition. We don't know who the next CEO is going to be. We don't know what the company's strategy is necessarily going to change when that person comes in. That creates a certain amount of additional risk that it's hard to evaluate right now. So for that reason, I'm certainly not looking to buy any Solid Power right now. I own some. I'm not selling. I think we need more information generally before making any big investment decisions with Solid Power. Now, with QuantumScape, again, it's burning more cash, but it also has more cash on the balance sheet, which I think gives it a little bit larger margin of safety. It also has some pretty strong backers, people like JB Strable that are invested in the company who know a thing or two about the electric vehicle industry. To me, that's a bit of a positive, right? So thinking about where it sits, I think it's a little bit stronger business right now. But again, just like Solid Power, it doesn't have a commercial product. The reality is that this is not a binary outcome where you've got two horses in a horse race and one of them is going to win the race. There's no guarantee that either one of these companies is going to be a winner. Okay. I think we have to acknowledge that first of all. I think there's a decent probability that at least one of the two is going to have commercial success, but we don't know that yet. So as an investor, you have to consider that risk with your capital before you buy a single share in either one of these companies. If it's not capital that you can risk and truly potentially lose all of it, these probably aren't the kind of companies that you should be investing that capital in to begin with. Once you kind of get to that point, then think about how much capital you're willing to risk losing. Let things play out and let's learn more about these businesses. I can promise you, if either one of them is successful, there will be plenty of opportunities to invest in these companies down the line. There's no reason to rush into them just yet.